only mode.
Okay, welcome to our latest webinar on the international tax implications of Brexit. We have an esteemed panel of guests with us today to talk to us about this landmark event. Let me get some admin issues out of the way at this moment. We are recording this webinar. The webinar will be available, the audio recording will be available within a couple weeks. We'll also have a complete transcript of the event. We're going to blog about it, and we're going to provide all attendees and all of our members with a transcript of what is being said right now. To those people listening in, there is the possibility of submitting questions to our panelists. Just use the GoToWebinar control panel, use the chat, and send us your questions. I will make sure to forward those to Giancarlo, who's the moderator, and he will incorporate them into the discussion. So without further ado, let me introduce Giancarlo, and then he's going to take over and lead this discussion. Giancarlo Corvino, he's the director for the Center for International Fiscal Studies in Lugano, Switzerland. He's a freelance journalist based out of Italy and Switzerland who specializes in international tax planning. Giancarlo has 26 years of experience in consultancy for major banks and tax firms on anti-money laundering, banking, and tax planning. With that said, hope you all have a lovely webinar, and we'll see you towards the end. Thank you.
Thanks. Thank you very much, Matteo. Welcome to everybody, all the participants, all the speakers. And first of all, I kindly ask you to introduce yourself, because starting with this hot topic. So I kindly ask to Felix to introduce himself and why he's concerned with Brexit.
Thank you, Giancarlo. My name is Felix Bagilishya. I am the Business Development Director of Cobus Group. Cobus Group is a wealth structuring, wealth management company based in London. So we set up UK companies, offshore companies. We are helping clients who wish to invest in UK. The reason why I'm interested in the Brexit is because the majority of our clients are non-residents. They are based around the world, and they use UK structures for investing in UK or globally. So you can understand it's a very important topic for them in terms of structuring.
Okay, Luca?
Hi, my name is Luca Cerioni. I'm a lecturer in tax law at the University of Edinburgh, and my research interests focus mainly on international tax law, comparative tax law, and European tax law. As such, I'm also interested in Brexit and all potential tax implications which Brexit can have, especially the implications as regards the international tax framework which will be affected by Brexit for the UK, and as a consequence, the impact that Brexit will have on potential investors. And we know that the US achieved a lot in the area of direct taxation and of indirect taxation. Therefore, this is an area for me of academic interest, and I'm happy to share my thinking with a wider audience.
Okay, thank you very much. And last, Stephen, please.
Morning, my name's Stephen Land. I'm the senior partner of SH Lands LLP. We're a firm of chartered accountants based in central London. The vast majority of our clients are of an international basis, mainly from Eastern Europe and the European Union. We help them set up businesses in the UK, and Brexit will have a big implication on the free movement of those clients from the EU into the UK. Also, we use a lot of UK companies to help our international clients trade and invest on an international basis. And we're concerned about the effect of Brexit on the UK's tax treaties with the rest of Europe.
Okay, thank you very much. So now we start with the main question, but first some general question. After we will talk, we'll be more focused on taxation as is normal. So the first one, because as everybody agrees that anyway, also it was unexpected Brexit, it was anyway something that will, an earthquake. I mean, not just for UK, not just for Europe, but I think for the entire world. As UK is preeminent in financial, and also it has a long past of very great power. So the first question should be, will the British economy reshape itself following Brexit? Because it's for sure that we need a reshape of the economy. So can you tell us about what you're thinking, Felix?
Well, definitely, as you said, the Brexit has been a major event for, I think, the EU and for the UK and for the world, I would say. UK, as everybody knows, is a great nation in terms of export. UK is among the top 10 exporters in the world. And EU exports represents around 44%, even more, sorry, 44%, yeah, and 56% of imports. So, and on top of that, 30% of the law are the regulations implied by the EU will affect British companies who will want to export in UK or continue to export in UK. Based on that, UK will need to reshape its economy. UK will need, especially big business or UK company will need to review their supply chain, and with all the consequences in terms of taxes, but it's something we'll discuss later. So yeah, it's a big challenge for a great trading nation.
Okay, Luca, what do you think?
Well, I think that any answer at this specific point in time, it can be a bit premature, in the sense that I would assume, that, of course, that the UK still will want to have some economic and trading relations with the EU after the Brexit. Therefore, and I believe that the way in which the new relations will be shaped, the kind of agreement that the kind of framework that will be put in place between the UK and the EU after the Brexit and as a consequence of the Brexit will also have a huge impact on how the British economy will have to reshape itself. I also saw the figures that Felix was referring to. It's not like a 44% of UK export going to the EU, but the EU on its own has only 8% of export going to the UK, the EU on its own, I mean, the EU 27 at this point. And there would need to be, on behalf of the UK, obviously some attempts to maintain as much relations with the EU as possible. But the problem is that in this point in time, in my view, without knowing exactly what will be the new legal framework of relations between the UK and the EU, it's also difficult I would say, to figure out exactly how the British economy will reshape. Because if the new relations between the UK and the EU will be based, for example, on the WTO, say the UK at the Brexit, just a hypothesis, a potential scenario, at the Brexit, the UK without any particular agreement and trading on the basis of WTO rules, I believe that would be quite different in comparison with an hypothesis in which the UK stays within the European Economic Area. It would be entirely different also for the incentive probably of EU companies to deal with UK companies or to include UK structures, UK units within the restructuring of group. And therefore, I believe that at this point in time, whatever response we give is based on assumptions of which we'll take a scientific approach. Whatever response is given is based on assumptions that are not yet supported by evidence. And but for sure I will say the response depends on which kind exactly of relation the UK will have with the EU after the Brexit is completed. And on my idea, there are two opposite extremes on the spectrum for the relations. On the one hand, the UK completely separated from the EU and trading on behalf of trading as an independent WTO member. On the other hand, opposite extreme, UK in the European Economic Area. Well, in this last actually seems a bit unlikely in the light of the current developments at the political level, but let's say try to figure out scientifically, you know, what would be the implication. In the last case, I will see little need for reshaping, in the sense that EEA membership will keep open all the possibilities between the UK and the EU, and in my view, there will not need to be a drastic reshape, with the UK having full access to the EU single market, and therefore the plans which even multinational companies could have made in terms of involvement or structures in the UK or investments in the UK, I think will remain unaffected. In the opposite extreme, an extreme in which the UK needs to rely on WTO rules for trading with the EU, that could be substantially different in my view. And it is a case which I think it is a bit even too early to speculate, because I believe, from what I see, that the UK will try to achieve a kind of agreement which is a bit better than relying on the WTO rules. But if it relies on the WTO rules, the UK will have to rely only on its own ability to continue to act as a magnet for investors, to continue to act as a magnet for importers and on other countries. And this, you see, WTO is a completely legal, it's different framework, has a different purpose than the European Economic Area. In part, the purpose overlaps, but in part is also different. European Economic Area supposes a deeper integration, economic integration. And in my view, the reshaping of the British economy will depend entirely, most at least, on how the UK will reach, say, on what will be the relations between the UK and the EU after the Brexit, and according to those relations, on what will be the incentive for international investors to continue to invest in the UK. And so I would honestly prefer not to add some assumptions which may not be supported later on by evidence.
Thank you. Stephen.
First of all, it's going to be very difficult for the UK to negotiate its exit from the European Union. To get agreement with all 27 members is a really big ask. I expect that there'll be some sort of transitional arrangement where the UK still pays in a certain amount and complies with most of the regulations. There seems to be a great demand in the UK for keeping access to the single market, and the Europeans want the UK to keep paying in. So there's probably some sort of deal. But to get complete agreement on an exit is going to be exceedingly difficult. The UK's economy isn't really going to reshape. People said after the 2008 collapse that the city is finished. It hasn't. In fact, it's continued to grow. I don't think there's going to be much difference to the UK economy.
Okay, thank you. Now, the second question should be about how will Brexit be practically realized, but I want also to make you a provocation, because one of our forecasts of my organization and institution is maybe it's not based still on scientific approach, but more on what is the understanding of, because we work a lot with industrial sector. A lot of entrepreneurs want to see that manufacturing industry will come back strongly in the UK with a reduction of the financial sector and service sector. So what do you think about? Do you think that can be a way also to practically realize Brexit, or is it a totally out of mind position? Felix, please.
Sorry, yeah, I just wanted to come back to something some clients are asking us very often. I just want to remind people that UK is still an EU member, and UK will be a member of EU until 2000, let's say 19, something like that. And since yesterday, I think we have a clearer timetable in terms of Brexit, let's say. In terms of WTO, also, I just wanted to for people who are not very familiar with this kind of organization, today, UK will need, I mean, if UK decide to join WTO, UK will need to register again, which means to negotiate. I think Luca can confirm, and which means it could be a tough negotiation. I mean, obviously, WTO will welcome UK as a big trading nation, but again, it's another negotiation. So negotiating with UK, with EU, other EU members, as Stephen said, and starting a negotiation with WTO. But apparently, they started to approach the WTO. I mean, the government. Something else I wanted to say about EU. The irony now is EU is the largest protected market, in fact, today, and with the custom unions. So if UK want to reshape, want to build new relationships in terms of business outside UK, outside EU, they will need to focus and to promote British industry in new, or not completely new, in other territories where UK is not doing so well. Let's say in Africa, for example, or just UK export 2.6% only of its goods and services. So it's just something I wanted to focus on.
Luca?
Well, I agree with much of what Felix has already said. I would add only one remark, essentially, that of course the UK will have to try to build out new relationship for export with the territories in which it is not yet fully present. But I would like to remind everybody that the EU is already negotiating trade agreements with basically every region in the world. The EU is quite, in a sense, an attractive partner in trade negotiations because it can offer its counterparts an entire market now without the UK of 440 million people. So I believe the UK might be somewhat like a rebalancing, as you said, toward manufacturing and less financial services. It might be, but it all depends on what will be the future relations with the EU. I make an example. If there is, after of course the timetable, no? So the UK gives notification at the end of March 2017. If 2 years elapses, if everything is finalized, we leave March 2019. After that, if the relation between the UK and the EU is such that UK institutions don't have anymore the financial passport for selling financial products throughout the EU, if that is the scenario, I believe it will be important for the UK economy to try to rebalance less financial service sector and more manufacturing sector in order to try to export more, especially in regions of the world where it will not possibly have to compete with the EU itself. But the EU is in its own trying to negotiate, and is actually negotiating continuously trade agreements with nearly every region in the world. I just would like to remind that recently the EU finalized the trade agreement with Canada, then it started to negotiate with other regions in the world. They are continually negotiating, and they are also quite flexible. So I have the impression, this is one impression of course, that once the UK out of the EU tries to rebalance its economy to open up a new export market, especially in areas where it is not yet fully present, it might find the EU as a competitor at that point. And therefore, any, I would say, in my view, any prediction depends on whether the UK can somewhat be complementary with the EU even from outside the EU, or whether the UK will find the EU as a full competitor once it is outside of the EU. I think this will have a huge impact on how the British economy will have to reshape itself.
Okay, Stephen?
Well, first of all, the UK has a big problem in that it doesn't have any trade negotiators. For the last 40 years, we've been members of the EU, and they've been carrying out the international trade negotiations on our behalf. So we won't be negotiating any new trade agreements soon till we've got our team in place, which is going to take some time. I also don't see that the UK is going to reshape its economy. Some of the aims of the financial services may change, become slightly more international, but our cost base is so high that we're not going to be a low-cost manufacturing country.
Okay, now we enter more specific question. You know that everybody talks about an option for hard and soft Brexit. In the case of hard Brexit, so do you agree with hard Brexit in which the border of the UK will be closed to free movement of people coming from the EU? Felix?
Well, it's a very difficult question because immigration has been a very hot topic in UK, and we all know that this topic influences this vote Brexit. So it will be very difficult for the government to continue to allow people from outside, I mean, to enter and to come to work in UK. So it's a very sensitive topic. But at the same time, if UK wants to remain a great trading nation, especially in terms of services, where UK has a strong comparative advantage in service trade, which is growing more strongly globally than trade in goods, UK will need to rely on foreign highly skilled people coming from abroad. And in the city, we all know that there are a lot of foreigners working in UK in the city, especially. And so I think it's everybody, if the EU, the other EU members try to punish, as some people said, the UK for having voted against EU, let's say, it will be a self-defeating result, because it will be a lose-lose situation in my view, because the continent needs UK and UK needs the continent. So I don't think it will happen. I think we will end up with a soft Brexit, or maybe it's what I wish.
Luca?
Well, I believe also that from the UK viewpoint, at least in economic terms, a soft Brexit will be more convenient than an hard Brexit. And especially if one considers that the migration from the EU has most, at least according to the figures that I had the occasion to see, was mostly a migration of skilled workers. Skilled workers working in the city, working in the FTI, working in the financial industry, working in every sectors of the economy. In light of this, it was a migration which, in a sense, brought wealth to the UK. It didn't absorb resources, but in terms between what they absorbed and what they were bringing to the UK, what they were bringing was more than what they were absorbing. And taking this into consideration, and taking also the difficulties, of course, of negotiating a bundle of entirely new agreements, I have the impression that a soft Brexit would also be more in the economic interest of the UK, in the economic and social interest of the UK. And in light of this, I will say that I very much agree with what Felix has said. I mean, I agree from the economic viewpoint, according to available figures, and I don't believe that there will be a specific advantage for the UK in trying to block the free movement of people from the EU, especially because the EU, in the end, at least according to the latest intentions, will become a more and more integrated market, and the EU, 27, according to the figures said so, exports only 80%, somewhat like 80% to the UK. In the end, it's true, there is a reciprocal interdependence. Each of the two parties needs each other, but if the question becomes who needs who more, is it the UK who needs the content more or the content which needs the UK more? If the figures that I saw are correct, I have the impression that the UK needs the content a little bit more than the content needs the UK in economic terms. That is at least my impression according to available figures. And therefore I believe that a soft Brexit would be in the economic interest of the UK even more than an hard Brexit.
Stephen.
Well, I agree that a soft Brexit is in Britain's interest and also the EU countries' interest. Whether we can negotiate, whether we can actually persuade all 27 member countries to agree to a soft Brexit arrangement is a completely different matter. It just may not be possible to get an agreement in a reasonable period of time, in which case you'll end up with a hard Brexit arrangement with much reduced international trade and much reduced immigration going both ways. I mean, there are lots of UK people who go to live, work and retire in the European countries, and those numbers is going to reduce. So I would like to see a soft Brexit. It is in everybody's interest, but I'm just a bit concerned that it's not going to happen.
Thank you.
Just to add something, sorry, yes. In terms of
Hello? Felix? We don't hear you, Felix.
There was some problem with the connection.
Yes, we have some problem with the connection. Felix, we have a problem with the connection. Can you repeat, please?
Okay, sorry. Yes, what I said, it's when we talk about soft Brexit, hard Brexit, we are talking about immigration, we are talking about job creations, and I just wanted to remind people that UK is the top destination in terms of for FDI, for indirect investment in Europe. And for example, last year, according to some figures, almost 1,600 new jobs a week were created thanks to this FDI. So it's something that people need to consider.
But don't you think that, as a recent research of Italian university said, that Brexit won more for fear of globalization than immigration? In general, globalization, I mean also for fear of invasion of Chinese goods, in general, not really because there is the immigration or the free movement. What do you think about Felix?
I mean, yeah, you are right. Obviously, globalization has an effect, but I think also, quite frankly, that when we analyze the results, 48, 52%, I strongly believe that immigration had a very serious impact on the final results. This is a fact, I think, that a lot of people now can acknowledge here in the UK.
Luca?
Could you repeat the question, please?
I mean, don't you think there was a recent research of the Italian university in which they said that Brexit won more for fear of globalization than immigration? I mean, also the invasion of Chinese products or other countries, not only for immigration.
Well, I don't have enough. I would say I don't have enough evidence to give a specific response to this fears of globalization. But you see, if one wants, in general, I can make this comment. If a country wants to be a global trading nation, in a sense, it has to accept globalization. I mean, global trade is an aspect of globalization. It's the commercial aspect of globalization, and globalization can have several dimensions, economic dimensions, social dimensions, cultural dimensions. And therefore I believe that if the globalization, once this globalization process has started, and for example, even in the area of tax, specific area of tax, all the efforts which have been brought about by the BEPS in order to try to coordinate the responses against international tax avoidance, in essence, was based on what? It was based on the awareness that the capitals can freely flow from one place to another, and investments can freely flow, and this is a consequence of globalization. If there is a specific fear of globalization, in my view, that fear will be a bit difficult to reconcile with an objective of being a global trading actor. So I'm not sure if it was a fear of globalization. I have the impression that it was maybe more, on the one hand, a fear maybe of some specific kind of immigration, and on the other hand, I have the impression that the Brexit vote was triggered by some political forces which maybe didn't explain in detail all what the Brexit would imply. That is my impression, at least. The Brexit, as we will see, is an easy process. There are several aspects which are implied, several regulations, law, from which the UK will have to try to disentangle himself. But I have the impression that when the vote to leave was cast, maybe some of the people who voted to leave were not fully aware of what was the full impact of the vote. I mean, and I don't believe that it was, at least I don't have evidence to say if it was a fear of globalization, because if one fears globalization, I would say it can't expect to be a global trading nation if you are against globalization, you see, which global trade is a consequence. So this is at least my own assessment of that, my own impression about that. I think at this point globalization will be very difficult to stop, and VUCAM and Ademiros, the economists have become very interdependent in my view, and not only the economics but also the general cultural environment. So my impression is that the response could be negative on this aspect. It could be that the Brexit vote was in part a product of some, let's say, some political forces, and the electorate, some part of the electorate was not fully aware of what the Brexit would imply. That is my impression.
Stephen?
I'm not sure it had much to do with globalization. There were two big issues that caused Brexit. One was immigration, and the other one was lack of sovereignty. The UK has a long tradition of parliamentary democracy, much longer than most other EU countries. And so we held great store in our parliament, and the steady erosion of parliamentary power and transfer of power to Brussels was very, very unpopular in the UK. And apart from immigration, that was the biggest reason behind Brexit. Also, the UK has trading relations with a lot of other countries, including the Commonwealth, and those have been almost forced to be curtailed because of our relationship with the EU, and that was also very unpopular in the UK. So I don't think Chinese goods or globalization really had a big effect on it. That was more in relation to what happened in America with the election of Donald Trump, and similar things we're seeing in Europe, where populist parties are coming to the fore against the traditional social democratic parties.
Okay, thank you. Now we start talking about taxation. So generally speaking, how do you think corporate taxation will be affected by Brexit? Felix.
Good question. And currently the corporation tax is at 20% in UK, and again, some people would like to reduce this corporation tax in order to allow UK to be more competitive and to compete with Ireland, for example, or Cyprus, or Luxembourg, or other countries in EU. If I remember well, I think George Osborne started talking about 15%, and some EU countries and politicians start complaining that UK will become a tax haven, and so again, it's very difficult to say today, but I think UK will need to be very competitive, and I can only guess that the politician will try to reduce again the corporation tax in UK in order to attract more FDI or to attract more investors.
Luca?
Well, I believe that nearly it's very, very realistic that to expect that there will be a reduction in corporate tax rates both in the UK and in mainland Europe. And of course, the UK will try to attract more investments, will reduce the corporate tax rate, but let's remember that the EU has never forbidden its own member states from reducing corporate tax rates. In fact, recently, just a few days ago, Hungary announced a 9% corporate tax rate, which will be the lowest corporate tax rate within the EU, and the EU has no objection to that. Let's remember that the EU at political level distinguishes between harmful tax competition and fair tax competition, and it said that essentially if a tax competition is implemented through a reduction of generally applicable corporate tax rates, so if it is not implemented through special tax regime, then it is a fair tax competition. The EU obviously will not prevent its own member states from reducing corporate tax rates, and what I can see, what I can expect is that in light of this, is that there will be a race to the bottom between the UK and the EU countries in order to try to see which will be in the end the most competitive. And I think the Hungarian move is very significant in that respect. First we had Ireland with 12.5% corporate tax rate, then Hungary 9% corporate tax rate. And a lot of countries have realized that in order to be attractive for international investors, they need to have a simple tax system, they need to be legal certainty, and they need to have roughly broad tax basis with low tax rates. And this is something that has been realized even by EU countries. So for sure, I expect a tax competition between the UK and the EU countries. And this is the first aspect of the way in which I think corporate taxation will be effective at Brexit, more tax competition on both directions. And another aspect, important aspect, I believe, you see, the European Union in the area of corporate taxation basically has been removing all the obstacles to cross-border investments. Let's remember that the jurisprudence of the Court of Justice removed a lot of tax provisions. For example, let's remember about exit tax, which made it difficult for a company to move its tax residence to another country within the EU. Let's remember what the European Court of Justice decided in the National Grid case. The EU has achieved in the EU a lot in this area in terms of removing cross-border tax obstacles, but once the UK is outside of the EU, the UK will try to attract investment from the EU. Nevertheless, the EU countries will be free, if they want, of course, to set up again the kind of tax barriers which they cannot set up within the EU, but they can still set up to other third countries. Therefore, I believe that there will be a great tax competition between the two areas, and there will be, on the part of the EU countries, an attempt to have cross-border investments concentrated within the EU rather than diverted to a third country. The UK can try to retain some of the, for example, some of the tax exemptions, some of the tax relief that it had to introduce as a result of the jurisprudence of the Court of Justice. Probably the UK will try to calculate what to retain and what to repeal. And the question mark, in my view, will be on the other side, on the side of the EU. Will the EU, the problem will be, will the EU countries maintain, for example, the rule of no more exit taxes for a company wishing to move to the UK once the UK will no longer be in the EU. At this point, the jurisprudence of the Court of Justice will no longer apply toward the UK. So this in the EU will be the biggest, would say, factors which will shape the future corporate taxation environment after Brexit.
Thank you. Stephen?
Well, the UK's plan to take its corporation tax rate down from 20 to 17% over the next, I think, 3 years. It is possible that it might go down to 15% after that, but there's been no announcements or even discussion that it's going to drop much below 15. So it's still going to be above Ireland, which is a direct competitor, Cyprus, and now Hungary as well. So I don't think there's actually a race to the bottom. The UK is still above some other EU countries. More importantly is ease of doing business, employment regulations. And there the UK does still have a bit of an edge over the rest of the EU. And I suspect that edge will increase as the EU moves away from the UK and the UK is able to have less onerous business regulations, and whereas the UK, which to a certain extent was providing a bit of a break on EU social legislation, that will then drift slightly to the left and make it more difficult to do business in the EU, encouraging foreign direct investment into the UK over and above the rest of the EU.
Thank you. Now we have two questions from participants. One is, I think, very interesting question, very pragmatic. The first is, pending this uncertainty now surrounds UK, what are the strategic plans and or Brexit solution currently you provide to your clients? Redomiciliation, creation of another base in another jurisdiction, or what? Felix.
Yeah, a very interesting question. I guess it's there is not one solution. I mean, the way we approach this type of question is we need to first analyze exactly how the type of business activities, where the client is trading, with who, if it's a holding company, trading company, etc. So we really need to analyze deeply the type of structures and business relationships the client has, and then obviously we need to put a plan B in action. So yes, it's possible to advise to set up another company in a new country, for example, if the client is trading heavily with EU, for example, EU countries. So as I said, yeah, it's quite difficult to, without knowing exactly the structure of the clients and the way they are doing business. But I would say putting in place a plan B, reviewing all the supply chains, the business relationship is key in this kind of circumstances.
Luca?
Well, I agree because for this kind of advice, one would always need to know the specific sector, the specific objective of the client. So it's quite difficult to give an advice without knowing exactly the business sector, the current economic and financial situation of the client, of course. And I would therefore invite the client, let's say, the concerned people to give more specific information about their own situation, their own objective, in order then to try to offer some more tailored kind of response.
Stephen?
We're getting a number of inquiries along those lines, and we're telling everyone more or less the same thing. We don't have any details yet. All we've heard from the Prime Minister is that Brexit means Brexit. We don't know if it's going to be a hard exit, a soft exit, what transitional arrangements are going to take place, how long the transitional arrangements are going to be in place. It really is too early to make any definite plans. You ought to look at, as other participants say, your supply chains, your trading with the EU, possible changes in regulations. If you're in financial services, you may lose your passport to trade around the EU, and you might want to establish a subsidiary in an EU country. But also within the EU, there are lots of political uncertainties in places like France and Italy and Greece. So to have a definite plan now and put it into place is really far too early. And none of our clients are doing anything at the moment.
Okay, the second question from participant also is very specific. With regards to the new rules of non-DOMs in UK coming to force in April 2017, will Brexit affect those individuals? Felix?
I'm not a great specialist in this field, but maybe Stephen, I think, could answer, I guess.
Okay.
In a very specific way. I mean, I have a, yeah, I think I would prefer to leave it or look at it.
Stephen?
The new DOM rules make it less interesting for wealthy foreigners to come to the UK because you become fully taxable in effectively a shorter period of time. Brexit may mean that it'll be more difficult for those people who come here, get a UK passport, and then want to go somewhere else in the EU. That's the implication of EU on these regulations. But these regulations are going to have more of a general effect on the EU, on the UK, especially London, where the world, I think London now has more billionaires than any other city in the world. And I think that trend of the world super rich coming to London is going to slow down, and we may even see an exodus of these people who have no real reason to stay here, and they could be going to other places.
Hello? Stephen?
Yeah.
Okay, nothing. Okay. Have you something to add, Luca, about?
No, just I would totally agree with what Stephen has just said. I just would add that what is happening right now is that some countries within the EU are trying to understand what made the UK an attractive destination and then trying to copy, in a sense, what the UK did. About the non-DOM, just make a mention that recently Italy is trying to introduce the same kind of rules. Entire non-DOM, and there is, you see, at this point for those individuals, an entire set of elements to consider: the new UK non-DOM rule, and if they are mobile individuals, which kind of rules would they face if they go in other EU countries, and how do this rule compare with the new UK rule on non-DOM? So, if I assume these individuals, of course, are interested in global tax planning, and with this assumption, I believe it is important, it is inevitable for them to compare this UK non-DOM rule with the kind of rules or the same, I would say, typology which have been introduced in other countries in order to attract wealthy individuals. So, of course, I don't say that the individual go to a country only because it has this kind of rules. There are several factors which may decide the destination, not only tax rules. What I would say is that to the extent that they are trying to implement global tax planning operations, I think it will be nearly inevitable for them to compare these kind of rules with the same kind of rules that other countries are trying to introduce. And the UK has to hope that the rules of other countries will not be so successful as the UK rule were, essentially.
Okay, thank you. Now, again, another question about taxation in general. Always with Brexit in mind, which do you think are the primary tax-related considerations for multinational company operating in the UK? Felix.
Sorry, say again, I didn't hear.
Okay, I mean, with Brexit in mind, which are the primary tax-related considerations for multinational companies operating in the UK? What will do Apple and Starbucks and Co?
I mean, maybe we can, I don't know if we can talk about VAT, maybe.
Yes, why not?
VAT is a EU tax. So what will happen to VAT once the UK leaves the EU? It's a question mark. In theory, let's say the UK will no longer be obliged to maintain a VAT system, but given its revenue raising potential, aging population, etc., the cost of NHS, it is extremely unlikely that it will be abolished, since VAT has been incorporated into domestic law. Leaving the EU will not automatically abolish VAT, and it will not change unless and until the British Parliament changes the laws. So I think VAT it's something some multinational company trading with EU countries should really consider. Yeah, it's one of the considerations, but there are a lot also. Custom duties also, something they should consider. Withholding taxes, the parent subsidiary directive also. If UK is no longer an EU member, this could affect this type of rules, let's say.
Luca?
I agree, and but I would like to focus a little bit specifically on the direct taxation sector, because let's remember what the EU has done in the field of direct taxation. So, parent subsidiary directive, merger directive, interest royalties directive, arbitration convention against economic double taxation for transfer pricing adjustments. And let's remember the latest proposals of the European Union. For example, the proposal just on 25 October, the presented proposal for a new common corporate consolidated tax base, and the latest proposal together with that was for a directive on a binding dispute resolution mechanism, which would, in their objective for all companies, for business, eliminate any kind of double taxation. In addition, let's remember that the EU directives in the field of cooperation between tax authorities. Now, from the viewpoint of, I would say, substantive tax consideration, it all depends in which way a multinational operates in the UK. If a multinational group has a branch of subsidiaries in the UK and in an EU country, until now they could rely on the parent subsidiary directive, on the merger directive, on the interest royalties directive. Once the UK is no longer, of course, a member of the EU, it all depends, in my view, again, whether the UK goes toward a hard Brexit or a soft Brexit. Because if it goes toward a hard Brexit, if the EU countries will no longer be bound, not even by the agreement, to concede freedom of movement, even of companies, toward the UK, I would expect that there can be some obstacles for multinational companies, for example, wishing to move their tax residence to the UK. I read some statistics, interesting statistics, according to which European companies, so the companies created, they were multinationals, under the former European Company Statute, if the UK had to make a balance between how many European companies transferred their seat into the UK and how many left the UK, well, you see that there were much more coming into the UK than leaving the UK. But let's remember that under the merger directive, so I refer to the directive of 2009/133, the companies from the countries, the jurisdictions from which those companies would try to leave could not levy exit taxes. Once the UK is out of the EU, the jurisdictions will be able to levy exit taxes, so to deter movement of the company to the UK. Let's remember also the recent anti-tax avoidance directive, which has been brought about by the EU, which on the one hand, it tries to fight international tax avoidance. For example, let's remember the CFC rules, but on the other hand, again, it wants to eliminate the risk of double taxation. In my view, for a multinational group which operates within the UK, if the group operates by creating, if it had operated until now by creating subsidiary branches in the UK and in an EU country, all the legal framework which was achieved by the EU in the area of direct taxation will also be very relevant, in addition, of course, to the area of the VAT. But all the framework for direct taxation will also be very relevant, both due to the directives which will not apply anymore. So I would advise the company to check very well what will be the situation once the parent subsidiary directive, the merger directive, the interest royalties directive will not apply anymore. Once the anti-tax avoidance directive will not apply. Once the, in addition, once the arbitration conventions, which eliminates the economic double taxation in case of transfer pricing adjustment, will not apply anymore either. So the EU tried to remove all obstacles to cross-border investments within the EU. When it comes to fundamental freedoms, the jurisprudence of the Court of Justice applies also, as we know. That's why I say the company will have to pay, to be very careful, to pay attention to the kind of Brexit that will be brought about. If it will be another Brexit in which an entirely framework will be removed, the company will have to calculate how much it will cost to set up or to maintain a subsidiary or branch in the UK. If it will be, despite the UK attempts to attract investment, because the other countries, as I say, will be free at this point to release again those tax barriers which were removed by the EU directives. If it will be a soft Brexit, then I would say the company does not need to be so worried, so concerned about those aspects. In the ER, the fundamental freedoms still apply, the tax directives don't apply, but I believe that a good part of what was achieved, or the keys which was achieved through the tax directives, can still be maintained through the fundamental freedoms. So my response again here is attention to which kind of Brexit will be implemented, because according to the kind of Brexit, the legal framework can change in a way, or can radically change, or can, for the good part, be maintained.
Thank you. Stephen.
Well, Brexit will have a significant effect on the UK taxation. The UK Parliament will get back its sovereignty over all our tax laws. Having said that, VAT is almost certainly will continue. There are lots of countries outside the EU that have VAT or very similar taxes, and it is quite possible that there will be some transitional arrangement where EU VAT and UK VAT will remain interlinked, as they have done for many years. I mean, there is an anomaly that the Isle of Man, which is actually outside of the European Union, has EU VAT. And things like that can continue. The other issue, of course, are the directives. Things like the parent subsidiary directive is one of the cornerstones of EU laws that affect multinationals. And the UK is used a lot for tax planning by multinationals who use the parent subsidiary directive. So to lose that would affect the UK quite substantially. And things like the merger directive and other directives, I suspect will continue, but at least now the UK Parliament will be able to decide which ones they want to keep and which ones they don't. But I suspect if there's a good case for keeping them, then they will probably remain.
So what will have the greater impact? The change in the UK tax system following Brexit, or a change in the way that other European tax systems apply to the UK once it is no longer an EU member? Felix.
Say again, sorry?
I say, but now, what will have the greater impact? Changes to the UK tax system following Brexit, or a change in the way that other European tax system apply to the UK once it is no longer a EU member?
I think both.
What?
Both, because again, it's all about, let's say, speculation, because again, it will be based on the type of Brexit we will end up with. If it's a soft or hard Brexit, the way the other EU partners will consider UK, if UK is becoming very aggressive in terms of tax planning, implemented some very, very aggressive solution in order to attract more FDI. But at the same time, UK is part of the G20, OECD, so there is a limit in terms of what UK can do. I think even if UK will regain his sovereignty, as Stephen Land said, but it's part of an international, let's say, OECD. So I think it will be it all depends on the type of Brexit we will have. This is my view.
Luca.
My impression is that the second option that you said could be a little bit more realistic, taking into consideration that all the rest of the EU has not only an economic objective to achieve, they also have a political objective to achieve, in the sense that the EU institutions obviously have to protect the integrity of the European project and to see that the European project can still go on. And I don't believe that the UK will try to reintroduce any of the obstacles which were removed by the EU. The UK will try to attract investments and will try to retain the part of legislation, of EU legislation, which removed the obstacles to inward investments in the UK. But I'm not sure where the opposite could be true. At the point, the political interest of the other countries will be to try to foster economic relations and therefore cross-border investments between themselves, probably more than between themselves and the UK. And my impression, therefore, is that it's likely that the second aspect, the second factor that you mentioned, is a little bit more likely to change. If I consider the way in which other jurisdictions are trying to behave, they are trying to ask themselves, who can gain the most from the UK exit from the EU? Let's see that Paris and Frankfurt are trying to attract, and Italy is trying to introduce a dom regulation. And so my impression is that actually the second element will be likely to change more than the first. The UK obviously wouldn't have an interest to try to dissuade in any way investments from coming to the UK, but conversely, I believe the other jurisdictions will have an interest to try to consolidate the cross-border investments between themselves rather than between one of them and the UK. That is my impression on the basis of the current trend which I'm just observing right now. And therefore, on this point, this is what I would conclude. Of course, again, everything is subordinate to the kind of Brexit, and I believe we don't have, honestly, now a framework which makes it possible to give a specific and accurate response. We can base ourselves on impressions of the political trends which we are perceiving, or impressions based on the objectives which are stated on the one hand by the UK governments, on the other hand by the UK institutions, and by other EU countries. Therefore, based on those impressions, I have the feeling that the objectives of the UK will be no longer so consistent with the objectives of the EU27. And for this reason, I believe the second alternative that you have mentioned is more likely.
Thank you. Stephen?
There is a worry in the UK that we've heard that a lot of European countries want to punish the UK for leaving the EU. And that may take the form of discriminatory taxes, non-access to the markets, possibly make it difficult for British people living in the EU. There has also been a suggestion that British people will be able to purchase an EU passport, so they become dual nationals. That may lead to them actually directly contributing towards the European budget and paying separately for that on a voluntary basis. These things are all possible. I think that by punishing the UK, the EU will be also punishing itself, but that is quite possible because they feel that there should be some economic pain in the EU to protect the the EU political project, in much the same way that the Greek economy is being forced into some very drastic contraction to save the euro.
Okay, now I want to make a last question, a little bit precise. Imagine the case of a hard Brexit, both because British government wants and both because European Union will punish with hard Brexit. So imagine no free movement of person, no financial passport for. And if you are the consultant of the government, in a case of a hard Brexit, how could the UK remain a world top investment destination? Felix.
Oh, good. It's a very, very tough question. But once again, I don't think, I don't really believe in hard Brexit, because I really, as we said, we stressed during this webinar that EU countries needs UK and UK needs EU countries. So I don't think that, and we have to remember 65 million people living in a population of 65 million people, a rich country, a big market. I don't think EU country, even France or Germany, can afford to let's say, not to lose completely, but to fight against this big potential market, this big market, in fact, not potential, big market. So that's why I really think that at the end of the day, politicians will be, let's say, more realistic and reasonable. Having said that, if, let's say, it happened, we have to plan. The only consideration, the only recommendation would be to focus seriously and with non-EU countries, and to try to attract foreign investment from outside EU, and to start promoting UK outside and EU, like in a lot of Commonwealth countries. And we have to remember that today 20% of inward investment are coming from US. And so yes, promoting UK outside EU, trying to reach some agreements, trade agreement with other countries will be one of the solutions, I think, and to continue to facilitate the ease of doing business in UK, which is part of one of the top selling point of UK as a FDI and top destination in terms of FDI.
Luca?
Well, I believe we should distinguish which kind of investments are we talking about, so for which kind of sectors, because I read some interviews by executive top companies. They said there were two reasons for investing in the UK. One there was a structural strength of the UK economic and social context, so some intrinsic strong points of the UK economic and social structures, which was a reason for investing, which can remain. But another reason for investing was that the UK was a gateway to Europe. If there is the Brexit, if the second reason for investing will no longer exist, obviously the UK government probably would have to try to promote the UK in countries outside the EU. But even at that point, the perspective, if the UK government tries to conclude trade agreements with countries outside the EU, you see a trade agreement is more like a contractual relationship. So when trade negotiators negotiate, it's more like in a contract, what can one party offer to the other party? Recently I talked to the people in the European Commission who negotiated the agreement with Canada, and they said, well, from the viewpoint of Canada, the EU was an attractive trade partner because it was a big market, and they could use this somewhat like a leverage in negotiating the agreement. And if the trade agreement, if this is correct, if a trade agreement is like a contract between the two parties, the question becomes, if the UK is completely separated from Europe, if the UK in this scenario, which might not happen, I agree that it's not reasonable to let this happen. So I read that it would be in the best interest of both to have a transitional period during which a kind of EER relation should be maintained. But if the scenario that you told us were to become a reality, if in 2019 we were hard Brexit, severing, obviously then the UK government would have to try to convince the potential trading partners that it has something to offer, even if it is completely separated from the EU. Then it will depend on what will be the interest of partners, the interest of China, the interest of India, the interest of US investors to conclude disagreements with a market which is certainly a significant one, which is certainly still remains a very significant one, but you see, it's, I would say, I'm not sure, honestly, I'm not sure if the leverage, if the contractual potential, of the UK will be the same as it was now, the contractual potential of the EU on its own. I had a talk with the people in the European Commission which negotiated with Canada and which we are trying to negotiate with other regions all over the world, and but even that would mean even Australia and New Zealand see the EU as an attractive trading partners for the questions of numbers. And will this remain for the UK alone if it is completely separated from the EU? I would say that in part it could depend on the way in which the UK government markets the UK. It will need to carry out somewhat like a marketing operation. But on the other hand, it depends also on whether the potential partners will be so interested only in the UK, and also whether or not, again, I think it depends also on the kind of political relations that the UK at the point will have with the EU, and on how the EU will behave in the global scenario toward the UK. So I would respond by saying that the UK government could try to make somewhat like a marketing operation. Whether or not the marketing operation will be successful this is a more complex matter, which is with several aspects to be taken into consideration. But if I can add something, I was noting from the latest news that the Scottish government was desperately trying to keep Scotland within the European Economic Area. They were trying to follow the Greenland-Denmark option. My impression is that maybe it could be even in the interest of the rest of the UK to try to have Scotland in the European Economic Area in order to have at least a gateway for easy commercial relation with the EU on its own, and for trying to continue being a gateway to Europe for cross-border investments, rather than being completely, even if this were to do to Scotland, rather than being completely separated from the EU, take into consideration that at this point the contractual power of, in terms of what the UK would have to offer when it negotiates a loan with China or a loan with the US, I had the impression that it's not the same contractual power that from which you could benefit as formally as a member of the EU. Simply for a question of numbers.
Thank you. Stephen.
Well, unlike Felix, I'm not that confident there's going to be a soft Brexit. I think a hard Brexit is more than a distinct possibility. I don't think that the UK is going to be able to get a comprehensive agreement with all 27 members of the EU, especially as a lot of the negotiations, not all the negotiators are French, and there is a feeling around the EU that they want to punish the British for leaving. So a hard Brexit is quite possible. Should that happen, the UK will need to look to its old trading arrangements with places like Commonwealth, Australia, New Zealand, India. The UK still has a special relationship with the United States, probably even more so now with President Trump, who actually has quite a few investments in the UK and is well known in the UK. So I think a hard Brexit is more than a distinct possibility. The UK will, when it gets its sovereignty back, will take the opportunity to make it an easier place to do business. There will possibly be some reduction in corporation and other tax rates to compensate those businesses that remain in the UK, to make them stay in the UK even though they wouldn't have access to the European market.
Okay, now so I ask you some concluding remarks if you want to some add to all this interesting discussion. So Felix.
Well, in conclusion, I will say that in my humble view, UK needs to secure the best possible access to the single European market once it has left EU. I would say that UK will need to focusing on trade promotion, as Luca said, or even Stephen, focusing on trade promotion, supporting export in countries outside EU, especially in service industry where UK has a strong comparative advantage. The challenge, I would say, for policymakers now is to maximize the opportunities and to limit the damage caused by the Brexit. Obviously, this will require skillful political negotiation. I know that apparently there is a shortage of negotiators in UK, but the government is recruiting apparently. So an economic policy mix with much support business competitiveness and investment. And but coming back to the hard Brexit, soft Brexit, what Stephen said, even if I know that the French talk a lot about punishing UK, but you have to consider that next year France will have an election, so who knows who will win? Maybe someone who is pro-British, let's say, or pro-UK. I don't know. But again, I really believe in a maybe not really a soft Brexit, but a reasonable Brexit, let's say.
Thank you. Luca.
Well, I would say international tax implications of Brexit, of course, will depend on which kind of Brexit will be implemented. It's possible that there will be a transitional period which could be useful both to the UK and the EU in order to better shape their relationship, and the international investors will have to watch very carefully which kind of Brexit which legal framework will be in place in connection with the kind of Brexit, and whether there will be a kind of transitional investors, of transitional arrangement in place, and for how long the transitional arrangement will be in place. After all, let's remember that Article 50 of the Treaty on the European Union, when that provision sets the 2-year period, it mentions that the framework for future relations should take into account the framework for future relations. So my advice, my idea would be for multinational businesses to check very carefully what is happening in terms of economic and political objectives, both of the UK and of the EU, and on how all this will be translated in the negotiations, in particular to check very carefully the terms of the complete departure of the UK from the EU. And once these terms will become clear, it will become also easier for international businesses to revise, if necessary, their overall tax planning operations based on the legal framework that I imagine will stay for some time, for some years. Maybe we stay for the point for the long run, assuming that the UK will not want to join the EU anymore. So I believe that the legal framework which will result from the Brexit will last for the long run. Personally, I thought it was worth maybe to have a look at also what the Scottish government is trying to do. But if you take into for granted that nothing will happen on the sector, I would say multinational businesses need to consider which kind of specific departure of the UK will have from the EU, and to consider that that framework will going to last for the long run. Therefore, it is on that framework that they will be able to revise, if necessary, all their tax planning strategies. Multinational groups then will be able to plan whether to locate branches of subsidiaries in the UK or in an EU country. I know that this is a phase of uncertainty. I know that in the past I was a tax consultant, so I know that businesses don't like uncertainty, especially don't like prolonged uncertainty. And prolonged uncertainty is a bit a problem for investors. But unfortunately, there are some economic and political factors which are out of control. Of what multinational companies can do, they can try to lobby on the one hand the UK governments, and on the other hand the EU institutions and the EU governments, in order to try to induce them to come as far as possible to a soft Brexit. And in order to try to convince them, as stakeholders, that a soft Brexit would be in the interest of both. Of course, I also believe, like Stephen said, that hard Brexit is a likely scenario, but the international investors would have a choice, basically, either to accept the hard Brexit, believe for what it will generate, or maybe they can try to have an active voice in the Brexit process and to try to lobby both parties, to explain to both parties why a soft Brexit would be in the mutual interest. And of course, for businesses, a soft Brexit would also imply less concern from the point of restructuring and revising their available strategy. So that would be my conclusive, let's say, advice for businesses.
Thank you. Stephen.
Well, unlike the other two participants, I'm not so sure we're going to end up with a soft Brexit. I think the political will trump the economic sensibilities, and I think we will end up with a hard Brexit. I don't think it's going to help the European members. I think that they will suffer just as much as the UK will. The UK will have to look to renew its ties with its older trading partners in the Commonwealth and in America, and also to make it an easier place to do business with lower taxes and lower regulation. I think that the UK is still a great future. I think that people will still come to the UK. We still have an awful lot of wealthy people here, and they're still coming. The immigration figures, net immigration in the first 6 months of the UK, in first 6 months of this year, were at a record, and since Brexit was announced, have increased substantially. A lot of them from other EU countries where people are trying to get into the UK before the UK leaves the EU. So there's clearly a great desire for people to come to the UK, but I do think that we're going to have problems with the EU and with Brexit because our relationships are going to change quite substantially. And multinationals need to plan for the eventuality of a hard Brexit. They may be pleasantly surprised that it's a soft Brexit, but I think they need to plan for a hard Brexit.
Thank you very much.
Okay, thank you.
Thank you.
Go ahead, Giancarlo.
Yes. No, I don't know if I can say something.
Go ahead.
No, some concluding remarks, maybe this, because I see now we have a little two parts. I am more aligned with Stephen, and Luca and Felix are more on the same, of more soft, we are more hard. For me, the final consideration is always to see what will happen in European Union, because also if we forecast that in the next French election we have, for example, the extreme right win, and they will start talking about Frexit, and I don't think that if we have any more European Union with which Britain can negotiate Brexit, we will have a more complicated scenario. So I think that anyway, I think the way in which we will have hard or soft Brexit will be the way in which European Union itself evolve in the next year, with the possibility of Frexit or Italy exit or Austria exit or something that will get more trouble. This we have to consider because it will be really more important for European Union, for UK, to see if really it will have to negotiate with the European Union or already with the European Union this getting collapse. Thank you.
Okay, thank you very much, Giancarlo, for doing a great job moderating. Thank you, Luca, Stephen, and Felix for participating. I think this was a very insightful discussion on Brexit and the tax implications thereof. I forgot to mention at the beginning of the transmission that James Ross, who was another one of the panelists, unfortunately had to step out last minute. His wife was giving birth, so he had to go see to that. So just to get some admin issues out of the way, we have recorded this session. We will have an audio recording available within 2 weeks or so, and we'll also have a full transcript of the entire conversation. With that said, thank you very much to the 4 of you on behalf of TaxLinked and all of our members, and I hope we get to do this once again once Brexit actually happens. It'd be interesting to see how things have changed and what are reactions following that. So thank you very much and have a lovely weekend.
Okay, thank you.
Thank you. Bye.
Bye.
Thank you. Bye.
Bye.